Good morning, traders. It is Friday, the 23rd of October, 2015, 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. There's a lot to cover here this morning. Some interesting play yesterday, um, and then after the close as well. So we're gonna cover quite a bit here. I'll try to zoom through it without losing you, hopefully. So uh, last night, Amazon reported plus 17 cents on Q3 earnings versus minus 10 cents expected. That's a huge swing on Amazon, which has been a stock whose earnings has been quite interesting. Google reported 735 versus 725. Microsoft came in 10 cents better at 67 versus 57 cents, with revenues also beating Google's revenues and Amazon's revenues also beating. AT&T reported 50 cents versus 68 cents, so it's worse. 39 versus 41 billion. So those caused a very substantial move after the close on the Nasdaq and in the S&P. And then following that, as if that wasn't enough to propel this market forward. And by the way, a market being pushed up or down based on earnings is much, much more logical and much easier to trade, in my opinion, in my experience of 15 years, than a market that is propelled based on what Yellen said or didn't say or what Draghi said or didn't say. That's a market that's back to the fundamentals and is much more uh, predictable, in my opinion, as predictable as a market can get. Last night, Bank of Japan says it's likely to cut both GDP and CPI forecasts at its October 29th policy meeting. That's a week from yesterday. This is big news because it basically says that the all of the QE that the Japanese have been pushing out have not done anything. So what's the solution there? More yen, more QE. Japan's PM Abe's advisor said that fresh easing would likely win majority vote if proposed by Kuroda at next week's policy meeting. There you go. Um, this paves the path for more QE from Japan, one of the largest liquidity providers, currency liquidity providers in the world. Eurozone October preliminary manufacturing PMI came in at 52 versus 51.7. Manufacturing came in better in Europe. So all of those combine to give us a market that is likely to tackle its all-time highs. Looking ahead at today, we have at 8:45, that's 15 minutes after the open, 8:45 Central, we're looking for U.S. PMI manufacturing October 52.7, and then we have the Baker Hughes rig count at noon for the folks in the energy industry. Um, and then other than that, we have a couple of speakers from Germany, but there's really nothing on deck for today that's likely to push us around any further. I'm not seeing anything on the calendar. So that's pretty much it. The rest of it is pretty much technical. Let's look at what happened yesterday. I need to switch this to a 4 tick because there was a lot of activity yesterday, so I need to slow this chart down. Let's let that update. Here we go. So yesterday, the expectation. I talked yesterday about the fact that there's a low historic probability of a market being in balance um, for another day, and it's we looked at the market's shape, the profile shape, and we talked about the fact that it is really ripe for a move, and that it's likely to fall out of balance. Actually, I covered that Wednesday for on Wednesday morning for Wednesday's trade, and we did get the sell-off on Wednesday, breaking this 3-day balance. 4 days balance is pretty rare. Um, especially a compression type balance like we're seeing here. It's pretty rare. Generally, by then you have a lot of people who have put in their orders in a tight range, and it's likely to squeeze out of that area. We got that on Wednesday. It looked like we're breaking for 2007 and 2001, and it looked like that part of the plan was on the way. Then we came in yesterday with a gap up. And the expectation for Hypo 1 on the gap up is very straightforward, actually. We're opening in value, in range, and the expectation is we would open, test value high. The value high is not the greatest here, but it is valid. Test value high or somewhere in that area, and then pull back and push to 2016 and likely drop to close the gap, but expected yesterday to mostly play after poking through possibly the low. I expected yesterday to mostly rest inside of Wednesday's range. We did get the ECB news yesterday, the ECB conference. There was a big catalyst there which caused the gap overnight, but still, that had been done by the time the trader bite started, and the expectation was for it to drop. Now, here's the thing. I've talked about this quite a bit, the Monty Hall problem, the Monty Hall puzzle, statistical puzzle, which doors the prize behind. We did not get any responsive selling. There's an extremely high probability that if we open in value, we touch, at least touch or equal the prior day's point of control. Very high probability. It's in the 90% range. Again, past performance, not indicative. But if that doesn't happen, as I've said before, when my primary hypo is wrong, it gives me a lot more confidence in the opposing hypo. We just did not see it approach that 90% play back to the point of control. Again, we're opening in value. We would expect to see the point of control get touched, usually in the first couple of hours of trading. This showed that higher time frames were moving away from the prior day's balance and are pushing away, which was Hypo 2. Hypo 2, however, was really for it to break this 31 and get tangled in this low volume node, the CLVN, this rejected price. We generally get tangled in these areas, get stuck here. We generally build a profile that is fat on top of the low volume node with a point of control right there, and then usually the next day we break higher and start moving up to the next area, the next high volume node, which was right there, which was almost exactly yesterday's high. That didn't happen. It just pushed right through. We did have a pullback, but it's just never came back. It was very, very strong yesterday. You could see the volume. So here's the 20-day medium volume right here, shown by these yellow, thin yellow bars. This is the 20-day median volume for each 15-minute bracket that you're looking at on this chart. And look at the actual volume. There was a lot of participation yesterday. They meant business, and it shows up across the board in the fundamentals chart and everything else. We see that the 52-week highs picking up pretty swiftly after basically flatlining since this sell-off. Once the sell-off happened, the 52-week high, the number of stocks making 52-week highs has basically been on a flat line near zero, and all of a sudden, boom, it starts to pick up. So there's wide participation in that in the overall rally. The surprising thing yesterday, though, I keep track of breadth. Breadth is the net issues that are positive minus the net the sum of the issues that are positive, count of the issues that are positive versus the count of the issues that are negative. and there are 500 issues, so it can go as far as plus 500 or minus 500, right? And what we saw yesterday is it opened and it went up, but it went completely sideways. On days where we've rallied strong, it's pushed into the mid 400s as far as issues that are higher versus the issues that are lower. And it created a doubt in me for that that this rally is going to continue through like it did yesterday. Compound that with the releases in the tech sector, and you have something that really triggers stops quite often for a lot of people yesterday. It just this is a meaningful rally. We have canceled out. If we look at the composite, we have canceled out basically the sell-off. We are back into this really boring mid-February all the way through to mid-August balance for this year. This area here has been traded and auctioned and back and forth and back and forth and back and forth all the way through, and it got really tight back here mid-August. It got really tight before we had that break on the 20th, 21st, and then the 24th was that lock limit down day pre-market on the S&P. And what we've done is we've breached back into this balance zone. You can see the profile for it, and the most valuable price in this area, the most important price, is 84 and a quarter, and we're within earshot of that. 84 and a quarter is expected to provide a fair amount of resistance and a fair amount of chop. But once that gets taken, we're looking at 2117 as the next target. Again, the market moves from balance to imbalance to balance to imbalance. So it moves from high volume node to low volume node. If it cannot see any resistance in the low volume node, it moves to the next high volume node, to the next low volume, high volume, low volume, high volume, low volume, like that. It's where it works its way through that way. And that's why when we draw a profile across what has happened over since the high from 2017 all the way through to yesterday, we see this area which was key to us, that 2030 that I was talking about yesterday. So we've moved from one large high volume node through the low volume node, and now we're moving into the next high volume node. Okay, and so this is likely to confront some resistance here today. We do have a gap up again because of the just great earnings that we got yesterday after the close. But this is likely to run out of steam because prices have moved a fair amount away from value without a retest. Generally, we want to see a base. As a buyer, I want to see a base. I want to see it to base. Unable to push through and then walk its way up. That gives a much better, much more solid setup for buying, for me to confidently put my money as a buyer if I were an investor, confidently put my money as a buyer in the market. Currently, the market's trading 67 and a quarter, which is the next naked point of control. This naked point of control comes to us from 819. There's a gap at 820. So let me scroll back here a little bit to look at where we're trading. We're going back to 819, 820. These are the days that we're trading right now. We're trading right here at 67 and a quarter, the point of control. So this profile is very thick here. I'm looking for it to see resistance this morning. I'm looking for resistance in the 75 area. I'm looking for the market to stall out. I'm looking for it to basically be stuck trading in this 75 back down through to the 50 area for today. I'm not expecting it to run through to the 84 half just today, unless of course we have some more awesome news that pushes us forward. But today is tricky. We're opening out of range, out of value on earnings. On a strong base of earnings, there's an incentive for both sides to act in the market today, and there's a fair amount of reason for sellers to interact at these prices. Prices are high enough that they're probably going to attract sellers. But because we're inside of the prior balance and because of the news that we had last night, there's a fair amount of reason for the buyers, the bulls, to expect 2117 to be a target within range now. So, in looking at how things are moving, I go back to my trusty weekly. So what I did with this chart, each one of these profiles here represents 1 week of trading. Each color represents a different day. And this is what we've done since the 24th low that we put in at 1821. We've balanced, we've broken out, and then on a weekly basis, we've been one time framing. And you can see here that we've been balancing quite a bit in this 31 down to the 08, 07 area. You can see that the point of control that we're looking for yesterday or the day before yesterday, 2007, and why, how these line up. This is a very orderly auction coming into the balance. And then yesterday was the green. Thursdays are the green. And Thursdays, if you look back on your chart, the last several Thursdays have been movers. It's not sure why, but every Thursday we've seen a big move take place, with Monday, Tuesday, Wednesday building up to that move. And then we've seen Friday, which is the blue here. Friday is more of a continuation. You can see Friday encapsulating Thursday, Friday encapsulating Thursday. It continues the move up, but it's in a rotational. You can see how fat it is in a rotational way. So there's no reason not to expect this to continue. We're up into the 62 area. I expect the Friday, the blue profile for today, to look something like this, which means it's likely to be rotational, and we are pushing up against a lot of volume that we've left behind. This over here on the left, from the 27th of July, is all of the profiles connected together that make up everything from the high going forward. And so what I've collapsed together here is a bunch of weekly profiles to see where the volume is, where the trading or the auction has been facilitated best. And you can see here we're starting to push into the thicker part of this profile. We're starting to move into these thicker areas. This is basic auction theory. It's not really a theory to me because I've seen it, and many of you have been following for the last 5 years or something that I've been talking about this, have seen it play over and over and over. So today, look for some responsive selling on the open. I'm looking for this to pull back a little bit. Amazing range on this 630 bar has moved the volume up, and it's seen a lot of participation, but look at what it's doing. It's moving back. It's falling back. It's retracing to the scene of the crime. The scene of the crime is the 2061 area, and so on the open, I expect this to be an open auction out of range. This morning, I'm looking for an open auction out of range. I'm looking for it to trade both ways. I'm looking for wide swings, something in the 4-5 point swing area. And then I'm looking for it to resolve downwards towards the 2057 quarter to 2055 gap zone from the 20th of August, and then potentially a retest of yesterday's high and close. And the overnight low, and then I'm looking for it to just rest there. I expect traders, the larger traders, to leave early today. It's been a busy week. And then overall, I expect this to be a responsive day, not an initiative day. It's gotten a little bit ahead of itself from an auction perspective. However, and I outline this, I want to tell you, I don't get a prize every time Hypo 1 works out. I don't. All I'm outlining is what it's most likely to do given the histories I've detailed here. And I know I'm being long-winded here, but it's important to note because we had an extraordinary day yesterday. it's important to note that if Hypo 1 is wrong, in other words, if we open and we make a small blip of a pullback and then we start to trend up, these are big trend up days. These are big days up. And then the target becomes 2084. And that is your largest, basically the mother of all composite points of control in the area and the last frontier before the 2117 high. Um, if the probabilities are better for responsive selling, everybody that's in the money yesterday is going to look to take some to peel some profits off, so they're becoming a seller coming into the weekend. And if they're not, then the higher time frame, the other time frame, or the OTF is likely to keep pushing if it's unable to pull back. And so I will take a hit, I'll take a loss on the short looking back. The target, this 2055 or 2056 area, and then the 2051 quarter for the overnight stat. And that becomes my target, and I'll announce that the target's been hit when it has been hit. But if it does not do that, then this gives me a big clue that the sellers are just not present at all, and it's likely to push through the overnight high and target that 84 up there. I know that's a handful to process here all at once, but you're all smart as you follow along. Just see what the auction plays out, what parts play out in the auction, and how things materialize on the open. The most important factors to look at on the open are: where do we open? What kind of a opening swing do we get? Who's the initial? How are the first trades coming in? Remember, people trading on a higher time frame are basing their decisions on daily data, historic data, and they take their position early in the game. And that's why we have the initial balance, the stuff that shows us these yellow lines, the initial balance, the first hour's high and low. Generally, most of the business is done in the first hour. But the first few minutes show us who's got the strength. Do the buyers come in and leave a nice print on the market showing good volume and a good high opening swing, and a good low opening swing? And then what do we do with that once it's in? So I'm looking carefully to see what does the opening swing look like, and who's breaching it. You know, if the opening swing is an open auction out of range, it's swinging both ways, maybe wide, and it breaks through, and then it's not able to recover all this business that was done earlier. Short, 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 looking for it to drop. Okay, but if the opening swing kind of sits sideways, and I see that the sell swings are getting weaker, the buy swings are getting stronger, then I'm looking for a pullback for a long, target the overnight high for the overnight stat, target our major target at 84, and that becomes the trade. Okay, so I'll leave you with that. I know that's a lot of stuff to go over. Been talking for 25 minutes. Good luck to you. It's Friday. Please don't get emotionally involved. Obey your stops. Do not come back Monday feeling like you have a lot less money to trade with. It's just not worth it. Obey your stops, obey your daily limits, so that you can come back and continue to be involved in the infinite stream of trades that are available in the market. Watch your risk. Good luck.